Struggling to find consistency in your trades? You are not alone. Therefore, in this video, we are going to build a simple yet powerful trading system. But I'm not going to spoon feed you. We are going to build this together using these 5 steps. Step 1, idea. Many trading systems fail because they skip this first step, as it sounds so simple. Therefore, I really want you to pay attention, as this will lay the foundation for every trading system you build in the future. There are 2 different types of ways we can go about active trading. Of course, there is day trading, as you all know, when you open and close a trade within the same day. Then there is swing trading, where you may close a trade days, if not weeks, after initially opening it. These 2 come with their own pros and cons. The first pro for swing trading is that less screen time is required. You can really just check your positions at the close of each day and be a successful swing trader, whereas with day trading, you may need to be watching the charts all day. However, watching the charts all day provides you with more trading opportunities with day trading than you get with swing trading. And finally, I believe, and I think this is agreed upon very largely in the trading community, that utilizing larger time frames, so trading the daily chart rather than the 5-minute or even the 1-minute on day trading, allows for more consistency. So that pro goes to swing trading. Therefore, with that information, you need to decide for your trading system what style fits your lifestyle the best and your trading goals the best. So for this video, I'm going to build a swing trading system, as I'd imagine 90% of the people watching this video still have day jobs, so you can't watch the market all day. And I'd imagine a lot of your goals are to be consistently profitable to the point where you may be able to replace that day job's income one day. There are also 2 main trading strategies in which trading systems are built around. The first being reversal, in which you're looking for stocks on dips to bounce. The second being continuation, in which you are looking for strong stocks to continue being strong. These also have their own pros and cons. The first being win rate. You are looking for a higher win rate on reversal trading strategies. However, you are looking for a higher risk reward on each trade with a continuation trading style. For some real practical examples of what I'm talking about, I'll show you 2 of my own trading systems that I use. The first being my reversal trading system on the SPY or the S&P 500 ETF daily chart. With my backtest code up here, you will see this strategy has a win percentage of 91%. However, the average win is $206. The average loss is $456. And you can just see from the trades themselves, I'm looking to get in and out quickly. I'm not looking for huge moves, because on reversals, you're buying weakness, right? So you really want to exit at the first sign of strength, which once again builds that high win percentage, but small risk reward. Next is my continuation large cap swing trade strategy. And you'll notice immediately the win percentage on this strategy drops to just 37%. I'm losing most of the trades I take with this strategy, but it still makes good money because there are 2 parts to building a profitable trading system: your win percentage and your risk reward per trade. It doesn't matter what just one of those statistics are. They both need to work together in tandem like a seesaw to build a profitable trading system. And you'll notice, vice versa to the reversal strategy with the really high win percentage, this one has the average win of $2,500 with an average loss of $790. So low win rate, but very high risk to reward. And you'll notice it's because I'm buying strength and I'm letting that strength run, whereas I'm getting stopped out quickly if it doesn't work. So, back to our initial goals when we decided that we wanted to build a swing trading strategy. We want to not spend a lot of time on the charts, and we want to be more consistently profitable. Therefore, I'm going to decide to wrap up my idea for this trading system by building a swing trading reversal strategy because I want that higher win rate just to add to the consistent profitability of the trading system. If you're interested in checking out either of those trading systems along with over 20 others and also custom scanners and indicators, they're all available on my website, daytradingstrategies.net. Link in the description down below. Step 2 of building a profitable trading system is building the scanner. It doesn't matter how good your idea is, how good the strategy, which we'll build later down the road in this video, is if you can't find the types of stocks to trade. So the first filter I've added to our scanner here is shares. Once again, there are two major ideas when it comes to the size of company you want to trade. There are low float stocks, meaning smaller number of shares available, and then of course large float stocks, meaning your larger number of shares available, your Apple, Tesla, Nvidia, those types of stocks. Really, the lower share stocks are going to be much more volatile, which can provide you with much larger moves. So you can make much bigger trades on low float stocks. However, just like trading on a smaller time frame, trading smaller float stocks also leads to much more unpredictability, therefore less consistency. So going back to our idea, once again, we just want to build a consistently profitable swing trading strategy. Therefore, I'm going to set this scanner to be up to only stocks with a minimum of 100 million shares. We want to look at large float companies to up our consistency to match our idea from step 1. Next, we start to get into some of the really fun stuff. We're going to start to think ahead a little bit towards what we would like our entry conditions to be. First off, I've added 2 more stock filters. Simply minimum volume of 100,000. You don't want to see stocks that are barely trading on the day. You don't want to run into any liquidity issues. That's why that stock filter is on. And next, I want a market cap of at least 10 million. That's not even that large in the grand scheme of things and the types of stocks we want to be trading. Just want to keep the really, really kind of small building radar detecting systems out of their mama shed kind of stocks off of my scanner. Hopefully you get that reference. But now let's jump in to the fun stuff. Let's start to think about entry conditions. So what are we building here? We're building a swing trading strategy with reversal intentions. Now, when it comes to trading reversals, you're looking to buy dips, right? But you don't just want to get caught buying weakness. I always like to go to this chart when sort of thinking through trade ideas because it's given you a great representation of strong move up and strong move down. This is SQ, which used to be square, now block. So when trading reversals, you want to be buying dips like this, right? You want to be buying this dip. You want to be buying this dip, these dips. You don't want to be buying this dip or, this dip. You don't want to be buying the backside of the move, or as the cool kids call it, catching the falling knife. So how do we do that? How do we objectify that? Indicators get a lot of hate. A lot of people will say, oh, just use price action. You don't need indicators. But when building trading systems, indicators are extremely useful for objectifying our ideas. Once again, we want to be buying dips on strong stocks. We don't want to be buying dips on weak stocks. But it doesn't mean anything to just say that. You have to have a way to objectify it, and we are going to use indicators to do such. My favorite indicator for objectively defining trend so that we may plug it into our scanner is the 200 length simple moving average. Simply, if the price is above the 200 SMA, we are in uptrend. If the price is below the 200 SMA, we are in downtrend. So, hopping back into my scanner, I'm going to now add a study filter down to this custom and edit. I want to be returned stocks where the current bar close is greater than the simple moving average with a length of 200. If I save and okay that is now a true filter for my scanner. Remember, there were two criteria for this entry condition that we are building our initial scan on. First being trend, second being strength. So I'm going to utilize the relative strength index indicator to objectify our strength value, and I want to be returned stocks where the RSI is less than 40. When combined with the trend study that we've already added to the scan, this will now return stocks that are in uptrend but currently weak, which will be the kind of stocks we're looking to enter. So if I add another study filter, simply hop into the edit, and I go to the RSI study. I want the RSI study to be less than the value of 40. Now stocks in which this are true, along with the close being greater than the 200 SMA, will be returned within this scanner. So the next and most obvious step is to run this scan, which I have already done. I sort my scanners top down by volume, as the ones trading the most volume have the least amount of liquidity issues, the stocks I would like to be entering the most. The first stock is RVNC, which I have also already pulled up. This is a gross chart, not one I would actually trade, but for making sure the scanner works purposes, is it above the 200 SMA? Yes. Is it below 40 on the RSI? Yes. Great. Next stock on the list is AZN. Are we above the 200 SMA? Yes. Are we below 40 on the RSI? Yes. And then just to check one more, just to extra confirm, HUMA, HUMA, above the 200 SMA, below 40 on the RSI. Yep. Looks like the scanner is working as intended. So I'm going to hop up here. I'm going to save the scan query. I'm going to call it 200 SMA dip. Sure. If I go ahead and save this and then open my left drawer here, I can go ahead and turn it on in my left drawer. And this is a little Thinkorswim specific tip. If you're not using Thinkorswim, ignore this next 15 seconds. But now that I have this chart linked to the same color and number that I have the chart linked, as I click on the stocks on this scanner, they immediately are moved over to the chart. Step number 3 of building a profitable trading system is alerts. Great, you know what kind of stocks you would like to trade, and you know the idea that you would like to trade on those stocks, but it doesn't matter if you don't know when the stocks appear on the scanner, right? So this step's pretty easy. Every alerting software I've ever used has a way to set up alerts. So you may need to look up your specific software. Since I've been using Thinkorswim all day here for this video, I'll show you how to set up the alert within Thinkorswim. If I simply left click on my scanner name here from this sort of left drawer, I can come down, alert when scan results change, and whenever a symbol is added to my 200 SMA dip scanner, if I hit create, I will now be notified. You could also set this up on specific stocks you're watching. Say you really like NVIDIA. Who doesn't? It's been an extremely strong stock of late. You would like to know if NVIDIA dips below 40 on the RSI. I'm going to right click on my chart, create alert. I'm going to create a study, edit, and I want to be alerted, once again, if the RSI crosses below 40, I want to be alerted. If I hit OK, create, if I jump into my alert book, you will now see I will be alerted when NVIDIA on the daily crosses below 40 RSI. So now the meat and potatoes of the video, the part you've all been waiting for. Hopefully you didn't just skip to this part of the video because the previous 3 steps are very, very important. But now the strategy and the back test, because they're going to sort of work in tandem. You'll see why in a second. We've created an initial entry criteria that was sort of born from the combo of our initial idea and needing to build a scanner. Remember, above the 200 SMA, below 40 on the RSI, that's when we would like to enter. Of course, you also need an exit criteria. Go all the way back to the idea section of this video. What did we talk about is how the seesaw works for reversal strategies. Higher win rate, but lower risk reward. This means on a reversal type strategy, we're not looking really for a huge move up. Really, any kind of move up after buying a dip, you should be looking to get out. Because you just bought a dip, right? You just bought weakness. You're really not expecting a massive bounce to come out of weakness. Now, does it happen sometimes? Of course, but it's not the goal of the reversal strategy. So, to objectify our initial idea of an objective strategy, I am just going to once again use the relative strength index to measure a bounce in strength. So we entered when the RSI was less than 40. Let's go ahead and set our exit criteria as exit when the RSI is greater than 45, right? Give us some sort of bounce, some sort of strength after the entrance. We will be looking to exit this trade. Now, there are two different ways you could go about doing this. You could manually go back and look at every example of when the RSI was less than 40 and the close was above 200 as your entrance, write down that price, and then write down the price when the RSI bounces back above 45. You'd have to do it on multiple different tickers. It would take you hours, but it can be done, and it should be done, unless you would like to utilize code. Now, this is not going to be a coding tutorial video. If you're interested in learning how to automate your backtesting like this to save yourself hundreds of hours of time over building multiple different trading systems, make sure you're subscribed to the channel. It's sort of what we do around here. Either way you decide to go about it, once you have the data collected, you of course need to begin backtesting and optimizing the strategy to find which variables work the best. Currently, we're at a 72% win rate, obviously making a decent bit of money on the NVIDIA daily chart. If I go ahead and click through just a couple of different charts here, once again, make sure though that the charts align with your scanner. Make sure you're looking at stocks with at least 100 million shares of float that are trading decent volume, right? Because you don't want to cheat by looking at stocks that wouldn't appear on your scanner. That's cheating a backtest. So make sure, we're looking at SPY, Apple, NVIDIA, Tesla. We're looking at all these kind of stocks when running our backtest. And just a heads up, this sort of automated backtesting statistic calculations you're seeing up in the top left are also one of my custom created codes, also available on my website, link in the description down below, but it's extremely useful. So now I don't really have to take this information to Excel, plug it all in, perform the Excel calculations. It's all shown for me here while I'm optimizing my strategies. But speaking of optimizing, remember earlier how we talked about strategy creation and backtesting sort of working in tandem? Well, this is where that's really going to come into play, because the next step is, while gathering your backtest information and performing these calculations, whether you have to do it manually or whether you have access to these codes, is to then come in and just start messing with things. Hey, what if we sell when the RSI is over 50 instead of 45? Then you would click through the same stocks and you would gather that information, right? Hey, what if we also, instead of buying when the RSI is less than 40, we buy when the RSI is less than 35 instead? You would go through the same stocks and you would collect that information. So that's how you begin to utilize backtesting to optimize and to build the best strategy possible. You all that have made it 19 minutes into my video, love y'all. Thank you very much. I'm going to put you on to a little bit of something that I've learned from my hundreds, if not thousands of hours backtesting strategies and backtesting reversal strategies like this. If I hop into my global strategy settings, I'm going to allow up to 10 entries in the same direction. If I do that, this is what it's doing, is it's scaling now into positions. Whenever the RSI is less than 40 and the price is above the 200 SMA, it will enter up to 10 times. Look at what that then does to my win percentage, 97% on Tesla. Wow. Look at what that begins begins to do to the win percentage on a reversal strategy like this idea of scaling in. And how did I find this? How did I find this works? By doing the strategy change backtest, strategy change backtest, strategy change backtest loop that I just talked about over and over and over and over again. That is how I found out that this works so well, that scaling into positions on a reversal strategy like this works so well. So just an example of how I used what I'm teaching you in today's video to build a very profitable trading system. Once again, if you are interested in automated data collection or the backtest data code that I have shown in today's video, check out my website, daytradingstrategies.net. As always, link in the description down below. You'll get access to over 55 different coded strategies, indicators, scanners, scanner watch list columns, all for one low cost. I don't charge per code or anything like that. Once you sign up, you get access to everything, and I am always adding new codes to the site. And those of you all that make it to the end of the video, I like to give you all a little extra push. I always say you all are the ones most likely to make it. You're the ones taking your trading education seriously. So if you use discount code END at checkout, you'll get your first month for only $15. That's over 55 codes, guys, for $15. And of course, you can cancel at any time under the My Account tab. Don't feel like you're locked in. But once again, it is a subscription because I'm always adding and updating codes. So if you'd like to remain subscribed and continue to get the codes, of course, please do. Daytradingstrategies.net, link in the description down below. Sign up and become a better trader today. All right, ladies and gentlemen, I've shown you all what I have found to be a very profitable trading system today, but my lawyers tell me I have to tell you not to just go trade this. Please, hey, I watched this video. This guy gave me a trading system. I'm going to go put real money into it. The purpose of this is to give you an idea that you can take and backtest yourself. And of course, also within this video, you sort of learn the steps necessary to build and backtest your own trading systems. So test this strategy if you would like to. Use the information you learn to build your own. Please don't just go and blindly start trading this because you heard some guy talk about it in a YouTube video. That's true for this strategy or any strategy you ever hear ever in anybody's videos. Hey, if you enjoyed, please take the half second, hit the like button. It means the world to me. Make sure you're subscribed if you're new and enjoy this sort of content. I mean, subscribing is free and you can change your mind whenever you'd like to. So just go ahead and hit that button as well. With all that being said, I'll catch you all in the next one.